Hey everyone, welcome back to the Deep Dive. Today we're diving into the Nassau Growth Annuity, based on what we found from diversified insurance brokers. So basically, we want to see how it could help grow those retirement savings and give you some solid income for later, security and all that. We're going to be looking at how it can grow, the income guarantees, flexibility, and how it can help protect your money.
Sounds good. Let's jump right in. So at its core, this annuity is a single premium fixed indexed annuity. It's designed to be a long-term retirement plan where your money's growth is tied to how certain market indexes perform, and then down the road, it can switch gears and provide you with a steady income.
All right, so how does this growth thing actually work? What are these indexed accounts all about?
Well, you can spread your money across a few different indexed accounts. They're linked to indexes like the big ones, the S&P 500, NASDAQ 100. And then there's the Smart Passage SG Index. You've got options there. And then on top of that, there are these enhanced indexed accounts that get interesting. They can potentially grab you a bigger chunk of the index's gains. It's called a higher participation rate. But you do have to pay a fee for that potential extra growth. Got to weigh the pros and cons there.
Right. So there are different ways to grow. Some may be riskier, but with potentially higher rewards, and there's a cost associated with that. And I see here it also mentions these different crediting strategies. What are those about?
Basically, that's just the way the annuity figures out how much interest to add to your account based on those indexes you picked. Some methods are standard. You have the point-to-point approach, which just compares the index at 2 points in time, and then there's the Sunrise strategy. Sunrise looks at the market's performance like every month. So that can change up how your interest is calculated. Gives you choices depending on how you think the market's going to do.
Interesting. Okay, so that's the growth side of things. But what about actually getting that income when you retire? Can you tell us about these income riders?
Sure. They've got 4 optional income riders that are all about providing a guaranteed income stream for life. And get this, the base amount for that income actually grows every year. It increases by 150% of the interest that your contract earned, minus any fees. So even if the market goes up and down, your potential future income is still going up.
Wow, so that could really give some people peace of mind.
Oh yeah, for sure. And then if you want even more predictable income growth, there are the Amplified Income Plus and Amplified Income Plus with Rising Income Opportunity riders. Those tack on an extra 3% simple interest each year on top of that income base. You can start taking income after 50, and it's guaranteed for life. You can even choose to have level payments or payments that increase over time.
It seems very focused on the long haul, but what if something unexpected happens and you need that money sooner?
That's where the flexibility comes in. You can usually withdraw up to 10% of your contract value each year without any penalty. And that's even during those first few years when surrender charges might apply. Plus, any required minimum distributions, RMDs, are always penalty-free. There might even be waivers in certain situations, like if you need long-term care, but that can depend on your state. And of course, after the surrender period, you have full access to your money without penalty.
That's good to know. There are options if things change. And how does this all play into estate planning?
Well, the Nassau Growth Annuity has this guaranteed death benefit, which is the initial amount you put in minus any withdrawals you made. That benefit bypasses probate, so it goes straight to your beneficiaries. It makes things a lot smoother. And then there's this return of premium feature where you can get your initial investment back if you decide to surrender the annuity after the surrender charge period ends.
And that growth we were talking about earlier, it's all tax deferred, right?
Exactly. You only pay taxes on it when you take withdrawals in retirement. That lets your savings grow much faster over time.
Okay, so looking at the big picture, it seems like this annuity offers the potential for growth linked to the market, that guaranteed lifetime income from those riders, some flexibility if you need to access your money, and it can even play a role in estate planning, all with tax advantages.
Yeah, that's a good summary of what Diversified Insurance Brokers is saying about this annuity.
So for all our listeners out there, the big question is, how could this fit into your retirement plan? It has that potential for growth and guaranteed income, so it's worth thinking about. What questions would you have about how to customize this annuity to your own financial situation? It's all about figuring out how to reach those long-term goals.
I think that's a great point to end on.
Thanks for joining us on the Deep Dive. We'll